Good morning, everybody. Today is Saturday, April 2nd, 2011. Let's take a look at these markets here. I was just so exhausted yesterday afternoon, didn't have the energy to get it done, but that ended up costing me some money. I'll show you in a minute. Anyways, the S&P 500 did finish with a gain of 56 cents. It had gapped higher, of course, and then a little bit of a sell-off. And when we look at the 1 minute time frame, when it got back above that volume-weighted average price, that's when the buyers regain control. And those are generally good places to buy with a stop below the low of the day. It did get a little bit volatile here towards the end of the day, though, as it broke that volume-weighted average price and some support here at about 133.40, and we had a fairly strong sell-off down to 32.90. But when we look at a 10-minute time frame, you can see, or even let's go to the 30-minute time frame, because this week what was important was on Tuesday when we had that initial test of the rising 5-day moving average. Monday night I was talking about how I expected a test of the 5-day moving average and then maybe a little bit of neutral consolidation. I definitely wasn't expecting the market to continue to make these higher highs and higher lows. But if you listen to the message of the market provided some fantastic opportunities. And it's not necessarily about having the right idea every single time, because the market's going to throw you surprises, but it's the ability to react to what the market's giving you and respond and adjust your plan. Otherwise, what was looking like a week that might have even been a waste of time, it turned out to be a great trading week. And I think I saw on the Twitter stream, Zor Trade said, the market put me. I was in 2 stocks, and the market put me in 11 more, and that's the right way to look at it. It's not about what you do. The market put him in those positions because he was listening to the market, and the market said, hey, we're going higher, come aboard with these positions. So anyways, we had to test the rising 5-day moving average. We saw continued strength, a little bit of consolidation, and then on Friday more strength, but maybe getting a little bit tired here. However, we are still above the rising 5-day moving average. I think next week this probably about 132.30 area is going to be an important level. When we take a look at the daily time frame, we're up against the highs from late February. This is similar to 83 though for the Russell 2000, and 83, as we know, in the Russell 2000 was broken decisively this week, and the market did go on to new highs for the year and for several years, and came close. Friday's high was. What was Friday's high? 85.02. The all-time high is 85.20. So just a few pennies short of an all-time high in the Russell 2000. It's tough to be bearish when you have that much strength. However, again, yeah, I pointed out on Thursday, I said, generally these aren't the low risk entry points. That is, after we've had these rallies from the rising 5-day moving average and the market gets a little bit extended, those aren't generally the low risk entry points. Now, the market, you could have made money obviously in there. We gapped up, and that's again why you don't sell, chase those gaps. You wait for them to settle in, get back above the volume weighted average price, and when the buyers regain control with prices above the volume weighted average price, then you can go in there and you look at it. We had the same thing here. This market broke below the support, below the volume weighted average price, and a little bit of profit taking. Maybe next week we see a little bit further profit taking that takes us down to that 5-day moving average, and if it got a little bit deeper than that, well, then 83 is going to be the obvious much bigger level where we would expect to find support. That's the level from the daily time frame. But the market acts healthy. We had 2,056 advancers on Friday and just 961 decliners on the New York Stock Exchange. The Nasdaq, it's broken this trend line and had a couple of up days, and here we are above the 10, 20, and 50-day moving average. We still have them kind of crossing back and forth, which to me represents indecision and not real dominance of a one trend that you can really align yourself with. So you still have to be looking, I think, more to the intermediate term time frame, such as the 30-minute time frame here with this 65 period or 5-day moving average. this rally began as the market gapped above the 5-day moving average. We had a test once of it, real nice rally. We tested it again this week and another nice rally. Looks like we're coming right down to it again. So early next week, the this 5-day moving average area in here near about $57 and 20 cents ought to be a level that will kind of be a battleground. If that gives up, then perhaps we see a little drop down to 56. I'm sorry, 56 and a quarter. And there's a good case to be built that might in fact be what's coming here, based on the action in the semiconductors. Don't forget these semiconductors. The market was led higher by the semiconductors, and right now the semis are showing a little bit more weakness to the broader market. But if these things really begin to crack, it will, in my opinion, and I'm pretty certain that it will take the Nasdaq lower with it. So be aware of that. There's not a lot of times where the semiconductors and the Nasdaq decouple, but the semiconductors generally are a little bit ahead. So you see, in relation to this 5-day moving average, we had a stage 4 decline, we had stage 1 accumulation, stage 2 markup, and this is looking like stage 3 distribution here. Now we got maybe a little bit sold off here late in the day Friday, because you can see that this is a prior level of resistance that had been support. We came down to that level, so now maybe a little bit of a bounce higher in the semiconductors, but be very careful of it, that if it falls short of the declining 5-day moving average and then breaks down below 34.05, then I think you're going to see a little bit further profit taking in these semiconductors, and perhaps we go down, at least to the 100-day moving average again. But this prior support acting as resistance with the 50-day moving average does not paint a good picture. Perhaps we're going to be headed back down towards that 32 level, so that would have an effect on the market. That's about an 8% drop for the Nasdaq, for the semiconductors. So the scenario that we want to be aware of, that could get the whole market a little bit more defensive on Monday, is if these semiconductors rally up a little bit towards the declining 5-day moving average and then they break down to a new low. I think that's a safe time to go in and do some shorting. So that's where you're going to be want to be focused, not necessarily focused, but be prepared for that, because if the market rallies up and then just continues higher, well, you have to be prepared for that as well. You have to have a flexible mind and be able to go with whatever market conditions are telling you. But right now, what they're telling us here in the semiconductors is that we had this rally, it underwent some distribution. Now what seems most likely would be a decline, but would it decline straight away on Monday from this level after we've had a drop of 90 cents or so, and we got this late day drop Friday? I think the more likely scenario is to run up a little bit and then find some resistance up in this area, and then for it to drop down. That's just what seems most likely. We'll see what happens. We'll see what the market gives us. Financials gap up and do nothing here, once again. So when you look at the daily picture, it held a 100-day support. We are back above 1635. So 1635 next week in the financials, that should be kind of important. But this financial group just seems more neutral than anything. I don't think you really need to spend much time in it. Last week we had the rare earth plays, and I spoke a lot about AVL, as Avalon as being the one that we wanted to focus on, and this one did break out to all-time highs here, and you can see that on the 10-minute time frame. Even on Friday, we had this strength early on, a nice consolidation, and when you look at that 1-minute time frame, how it broke some resistance here and just a beautiful rally. So there's opportunity in these rare earths, and should continue to be some opportunity in there. But we had a great week in Avalon. MCP had a great week as well. You could have argued on Monday that this market was extended. I was going to buy some calls, some of the what was I looking at, the March 17, March 60 calls in there, and where were they? I think they were about two. No, they couldn't have been because they're 160 by 170. The March 55 calls is what I was looking at, and they're 464.90. I thought they were too expensive at $2.70, but anyways, this MCP, I don't think it's done yet. This is the type of stock that is likely to hit new highs here in the next couple of weeks. But if you get involved at the wrong time, you could be down a couple points instantly. And it's looking extended in here. Maybe it needs to consolidate a little bit up in this area because we've had this big run, and now it's maybe slowing down a little bit. Still holding the rising 5-day moving average, but just be careful with it. It's only for traders who can really handle the risk. REE Friday, this one had a good run, which completely failed. But it looked like maybe getting back above that 1380 was going to push it. The daily chart doesn't look as good as the two favorites are Avalon and MCP. RE still looking like it's worth keeping an eye on next week, as is SHZ. Although this one is really kind of the garbage in the group. You have this big prior support, declining 50-day moving average. Don't pay too close attention to that one. I did mention Friday on Twitter that GMO, you look at the description of this company, they're a molybdenum miner in Canada, and they have proven reserves. And it's strange that it's completely been left out of this rally, this recent leg higher. The weekly chart looks good in general, Malloy, and Friday I was saying it looked like maybe it could get going. That was right in here. It did get going quickly, but completely failed as well. So if you're in this because of something I had put on Twitter, I'd say I wouldn't give it much room to the downside because maybe back below 525 before I would take a little loss. It's still, the bigger picture probably needs to clear 560 before it could sustain an upward momentum, and it looked like that it was going to be able to do that maybe on Friday, but obviously it just kind of fell back into the range here. GSM also is another rare earth play worth keeping an eye on. Some of the other names that we were talking about, PQ, we're still involved in this one. Rax, we got stopped out of. VGZ, we got stopped out of. We didn't get close to getting stopped out of that one. Bought that at $4 a share, and actually we raised our stop to 390. So it looked like, and here's a good example of a failed trade. That is, we had seen on the daily time frame a real nice uptrend. Weekly time frame, same thing, great uptrend there. So looking at that daily time frame, we're looking at this big volume increase, lighter volume on this pullback, consolidation, and then we bought it above 399 on Thursday. It failed though on Thursday, and a lot myself and a lot of people got out of the stock, but we officially had a stop down at 390. So that was stopped out, and maybe the stock can recover, but for now, when you buy it at $4 a share and it runs up, first of all, you always want to take a little bit of that profit off if the market gives you something real quick. That way, if you do end up getting stopped out at break even or minus a dime, then over on the balance that is, then overall maybe you break even on the trade. But anyways, that might be worth keeping an eye on next week. It's definitely not broken, but in the interest of preservation of capital and risk management, we are officially out of that one. Also out of ACI. ACI took off real nice on Thursday, gave back the majority of its gains, and then came in even more on Friday. So you take a look at Arch Coal. This weekly chart looks like it should be getting going, but it's not, and you just got to move to the sidelines. PCX did hold up better. Patriot Coal. You can see Friday had a good day, and then you also had we were talking about James River Coal. James River Coal broke some resistance and is looking better here as it had a stronger day on Friday and broke past this recent tight consolidation. Other names that we'd been looking at included Encana, ECA, Encana. Nice looking weekly chart here. The daily chart's really got to clear these recent highs, so I'd keep an eye on that one for next week. I think it's above 35.02 or so. Dick's Sporting Good. is is a sporting good retailer. It's had a nice tight consolidation here. Looked like it was going to get going Friday. Doesn't look horrible. I'd say now maybe a stop below this higher low here, just because I wouldn't want to give it much risk. But it's still in a decent uptrend, and the weekly is as well. The real winner in that retail we were talking about Thursday night was Under Armour. Under Armour was consolidating under these lows, and I said, keep a very close eye on this stock because these are the types of stocks that sneak higher and then can break out. Well, that's exactly what we had, and a lot of people, myself and a lot of people, got involved in this. What happened in here is we had that initial strength, we had that gap up. You don't want to chase it; it pulls back, gets back above volume weighted average price, and then just a beautiful run. I think most of us got out of it over in this area. It did hit that all-time high, so the $73.40 level was hit. And I told people, hey, when you get a big level like that hit, you always want to at least lighten up into it. But just a real nice 6 point rally in Under Armour on Friday. The one that annoyed me was that I had about 45 minutes before the market closed. My mind just couldn't take it anymore. So that is, I was mentally shut down. So I figured, well, I'm going to sell this stock. We were watching UTSI because it had this nice tight consolidation in here. And what we had noticed was right in here that it was getting some volume and it was past our level. Our level was $2.38. So it was getting to our level with some volume. So a bunch of us made a purchase of the stock in there. And at this point, I said, you know what? I'm just going to sell this and go take my nap. And I did, I did sell it. Did take a nice nap, got some good sleep in, and I came back and saw this. So that's just a bummer. That's what happens. I'm glad some of the subscribers, so that you guys got involved in it and held it because that's just a nice Friday afternoon bonus there. Obviously, the other one that is, I'm not involved in because I have that article coming out Monday morning, and I was kind of bummed out to see that this one went too. Is MPEL, Melco is the Chinese casino company, and it traded big volume. So this pullback, we were talking about it Friday, and it was the proper place to buy in here. I didn't buy it because I have that article coming out Monday morning, and I'd written the article Thursday night and Friday morning before the stock moved, so that's kind of a bummer as far as the article looks. But there's still opportunity in here. I think you look at this stock at $8 a share. We have this little spike high that came up to the 2000 lows. So in other words, we're talking about this little spike high here in 2009 up to about 845, and that was approximately these little lows here in early 2009. But or 2008 rather. But you get this, this stock can continue to move higher, and as I said in the article, that at least the revenues are increasing, and it's a stock that looks like it could continue to move higher. I'd say stop probably at break even on this one. There's no reason to lose money on it at this point. Harley Davidson, as I said on Thursday afternoon, I said I sold the stock because I was bored with it, and I also said that was probably a stupid thing. Well, because we got involved in Harley right here, it did gap up and give more opportunity for profit. If you take a look at the 3-day volume weighted average price, it did break below that. So I don't think you really want to be a holder of this. You probably should have been out of it Friday around noon when it broke volume weighted average price. But that Harley chart still looking decent on a daily time frame. I'd say we want to monitor it for the week going ahead to look for more opportunities to potentially get there, to get involved again. That is, MGI has been really one that we spoke about it over in here, and I don't know how many people are involved in it. I got out of mine Friday too. I got out of everything. Just um, I don't think the market's caving in, but I just wanted a fresh start, and I didn't want to think about stuff while I was away from the market for that last 45 minutes. Anyway, I also wanted to talk a little bit about currencies for a moment because it's kind of some interesting action in there. You look at the euro versus the US dollar. It's been in this uptrend. It's just a nice stair step higher. And looking at that weekly chart, you can see it's up against this weekly downtrend line. So it'll be interesting to see what happens in there next week. It's clearly in a big uptrend versus the US dollar, and the US dollar versus the Japanese yen, you can see here, is rallying after the intervention. So the intervention was started on where was it? Let's look at a 30-minute time frame. Intervention was started over in here, and it doesn't look. Let me just set this up so we can see. The full trading. Here's where that intervention was done when the central banks got together. They sold the yen, so they were buying the U.S. dollar versus the yen. It consolidated, then it ran up. Now it's interesting that it got right up to and through that declining 200-day moving average and up to this prior resistance. So I think that the U.S. dollar yen is probably due for some consolidation in here. But I've been trading this a little bit lately, and it's definitely. I'm going to write a post I think about my opinions of forex. There's definitely some advantages, but there's definitely some disadvantages to it, and I don't think it's something I'm going to stick with. It's been profitable for me, but it's just it's a little bit too crazy at times. You know, when you find yourself trading off a 50 tick chart, for instance, it's sometimes your face is a little bit too close to the glass, and that comes from taking advantage too much of the leverage that's offered to you. Anyway, it's Saturday. It's going to be 80 here in Denver. The mountains are softening up. I'm gonna hop in my car and go get a nice day of skiing in. So I'll have another video for you guys tomorrow with some ideas for the week ahead. Enjoy your weekend.